As Bitcoiners, one way of minimizing your capital gains tax is you just never sell and you borrow against it. But we talked about how that can be problematic.
Our strategy is the perfect complement to the never sellers of Bitcoin, to those who only want to borrow against Bitcoin, to get a holistic tax flow, cash flow, debt flow strategy that works in their favor.
You've said this before. A strategy is great until the IRS audits it.
We have been audited for over $120 million deal in California, all no change, no findings. So we're batting 1,000. It's literally perfect legal track record with thousands of transactions. So we're not guessing at this.
Welcome back to Hosting Bitcoin, the show where we explore the builders, thinkers, and the wealth architects shaping the future of money, freedom, and generational planning. Today's guest is someone who's on the front lines of helping investors not just create more, but keep more of what they earn and have the greatest impact that they can by outsmarting the tax code and designing exits with intention. Brett Swarts is a capital gains tax strategist, a real estate investor, and the founder of Capital Gains Tax Solutions, where he helps high net worth individuals legally defer taxes, optimize their exits, and preserve more wealth for the long haul. He's also the host of the Build It to Billions podcast, where he unpacks the secrets and strategies of high-performing entrepreneurs, investors, and leaders. He's worked with some of the most successful investors, entrepreneurs, and family offices to bridge the gap between traditional financial planning and emerging wealth tools, including Bitcoin, and how those strategies can be optimized for minimizing taxes. Today, we're going to dive into the wealth building mission, the personal impacts that you can create by being more intentional with your wealth, tax strategies, deferred sales trusts, real estate and Bitcoin, and why playing offense and defense is essential if you want to build real, lasting freedom. Brett, it's an honor to have you on the show. Welcome to Hosting Bitcoin.
Bo, grateful to be here. Thanks for having me.
So I know you as the founder of Capital Gains Tax Solutions and the host of the Build It to Billions podcast. But for anybody who's listening who doesn't know you, could you share a little bit about your background so that we've got some context about all the things that we're going to get to talk about today?
Yeah, originally from California, now living in Florida. Grew up in the real estate development business with my parents, mostly in the Bay Area of California, and then spent most of my time in a place called Rockland, Sacramento area. My brother's the first to graduate college. I was the second in our family. We came from mostly like a construction development background with my mom and my dad. And I fell in love with commercial investment real estate at a place called Marcus and Millichap and helping people buy and sell investment real estate. This is like 2006. So professionally, kind of cut my teeth in that market where the place, the whole marketplace kind of crashed in real estate for a little while, and had a chance to see what worked, what doesn't work when it comes to exiting highly appreciated assets. And it was tough. I remember in the beginning of the whole journey was, next to no money in the pocket and newly married, baby on the way. And so if you've ever been in that situation where you're like, hey, how am I going to make it financially? That's where we were. We were flat broke. Had to borrow $5,000 from my dad just to keep the lights on. Moving my brother to a small condo, and then the baby came. My wife was a rock star to be flexible enough to let the financial circumstance kind of hold us back a little bit financially. But we really grew a lot, and that's when I kind of really figure out my calling in what we're going to talk about today, which is building capital gains tax exit plans. Because I met a tax attorney and a CPA who taught us how to exit well when it came to real estate. Now, fast forward, I never knew it would be applied to Bitcoin or crypto. But it does, right? And it gives this flexibility to make a big impact, to have strategy and timing on your side without moving to Puerto Rico or having to do the just borrowing against Bitcoin and such. And so this is all we do now. We build capital gains tax exit plans, little hobbies like do jujitsu, played basketball in college, married now over 16 years as of a couple of days ago. We have 5 kids, 4 girls and a boy, and I'm grateful to be able to help those who want to exit really any asset, businesses, Bitcoin, real estate are our main 3.
Very cool. And you mentioned that a lot of this started to unfold around the '08 financial crisis, which is not a time that many people would think about mitigating capital gains. They're usually just thinking about keeping their heads above water. So how is capital gains or like exiting well brought to the forefront during that time period?
Yeah, I think it's just one of the key client stories is a guy named Steve. And Steve was married and lived on the big house and had 50 million worth of real estate investments. And he had two boys about 2 years apart. And it's interesting, growing up, my parents and I, while all the financial success was going on, it came to a crashing halt when the divorce happened for my parents. And my brother was 2 years ahead of me. And we didn't spend as much time with my dad growing up because of the divorce. And I'll never forget connecting these two, because Steve grew $50 million and then lost all of his wealth in the crash because he had too much debt, not enough liquidity diversification. Ultimately, he got divorced, went bankrupt. Money fights, money problems are the number one cause of divorce in America. And I think that kind of came crashing to the forefront as I observed it in real time. Him going at the top of his game in early 2007, telling him, hey, you should exit. And him going, I don't have a great capital gains tax exit plan. In fact, I don't want a 1031 exchange. It's not I don't even think I can, because the debt is out of whack, out of ratios, and the values are so high, and I want to sell high, but I don't want to get crushed with tax. I don't want to buy higher in a 1031 exchange, and just this whole conundrum of not having what's called a tax flow plan. He had a cash flow plan, but not a tax flow plan, and he didn't have a debt flow plan. And so he was living or working within a 1.0 version of wealth. And that's where most people make a mistake, right? They just have a cash flow plan, but they don't have a tax flow and a debt flow plan. And we didn't have a solution at the time. We said, yeah, we don't blame you. Like, we don't really know what you could or should do, because all we had was the old blockbuster method of the 1031 exchange. Anyway, so in the next couple of years, we saw him lose everything. And then that's also when I learned about, if we would have known what we have done here, we would have built a capital gains tax exit plan using a different strategy. So that came into front. And I said, if there's a way to bring families together to get truly passive income, to get debt freedom if they want it, to get timing on their side, to be able to leverage and diversify into other assets like a Bitcoin or other assets like real estate debt, and not suffer the consequences of not doing it when they want to do it because of the capital gains tax. Like, everyone's got to know about this Netflix way of exit planning. And that began the journey of, if this is true, this will change everything. And, fast forward, we were the first to do it with Bitcoin. And I believe that our strategy is the perfect complement to the never sellers of Bitcoin, to those who only want to borrow against Bitcoin, to get a holistic tax flow, cash flow, debt flow strategy that works in their favor, with, by the way, still only buying Bitcoin, just buying it when optimal timing, right? Or, and diversifying, dollar cost averaging, all tax deferred. And that's like the big picture here. If anyone's listening, like, I love and believe in Bitcoin. I'll be a client of your guys' here soon. And I just want to complement and add to the ability to make great decisions at good timing, without having to move to Puerto Rico or having to do the tax consequences of capital gains tax.
Yeah, that's one of the things that we talked about the first time that we met, is that as Bitcoiners, one way of minimizing your capital gains tax is you just never sell and you borrow against it. But we talked about how that can be problematic depending on your risk tolerance and what happens in the market. So when you've got Bitcoiner clients and you're advising them on mitigating tax impacts, if they've got to sell because they want to improve their life, they want to take advantage of another opportunity, or what have you, how do you speak to them? What do you put in front of them to give them an option that isn't just over collateralize yourself so that you're minimally risk of liquidation, but that's your only option?
Yeah, the biggest three mistakes of never sell Bitcoiners are as follows. Number one, they haven't really clarified their family mission, vision, values as it pertains to their wealth and their building of Bitcoin. Okay, and I think this is the single biggest mistake, even those who own real estate or businesses or entrepreneurs. Like they haven't spent the time to build out, what's my family mission, vision, values for my wealth, right? If you run a business, you have that, your missions for your business, or if you set your personal goals, but what about for your family and your wealth? And so starting with this big picture of what is the main purpose and what matters to most with the building of my wealth. And what that looks like is establishing what's called truly passive income, right? We believe that truly passive income is to your freedom and impact as compounding interest is to your money, right? And so using Bitcoin as the tool, right? As the investment, as the bridge to your truly passive income, and it supports your family mission, vision, values. Once you a wealth strategy, once you have that really clear, you can start to move through the tactical pieces of this. I think too often we jump straight to the tactical, right? We jump straight to just the tax mitigation. We jump straight just to the returns. Those are important, but they're not the most important. And so getting really clear on that, and I'll give you an example. Most of the investors we work with, we set a clear goal of $10, $20, $30, $40, $50,000 passive per month. Truly passive, where you have consistent, durable income that's coming in. It's part of why I love what you guys are doing, Bo. You're providing the mining of Bitcoin to create that passive opportunity to grow wealth and passive opportunity to get cash flow, right? Should you want to sell and exit the Bitcoin for cash flow. And so understanding that it's not one or the other, it's and, right? And so, so that's number one thing. And then second, as you're developing this truly passive income plan and you set that number and that goal in mind, you want to, as much as you can, I call it, automate and eliminate having to think about it, right? Where I know that the durable consistency of this money coming in that I can live off of is coming $10, $20, $30, $40, $50,000 per month, where I don't have to trade any of my time for this. It's truly passive. If you look at Robert Kiyosaki and the Rich Dad Poor Dad, which I love that, most people never achieve this fourth quadrant, right? They're typically stuck in 1, 2, or 3. And so I want to move people to that fourth quadrant. And I'll bring this to life with a who was a never seller Bitcoiner until she met our company and got our services. In fact, she worked for Google and she bought Bitcoin collectively. She spent about $50,000 of cash to buy a lot of Bitcoin early on. Well, that $50,000 investment into Bitcoin appreciated to $50 million of value in Bitcoin. Okay. And this was just a couple of years ago when Bitcoin topped out at about 68, 69,000. Well, she set a very clear goal of 54,000 a coin. She's going to exit 5 million. But the big challenge was she's going to pay about 1.85 million of tax. She lived in California, didn't want to move to Puerto Rico, but it was like, gosh, I don't really want to sell because of this tax, but I think it's a good time to sell if it hits 54,000 a coin. So we set that target. We got really clear. And the big piece was we can defer that tax with our strategy. Second, she had a vision and a goal that fit her mission, vision, values, which was to start a entrepreneurial educational online academy, kind of like a Khan Academy, to educate junior hires and high schoolers and just, more education. So it fit her mission, vision, values. Like she didn't let the never sell Bitcoin affect the ability for her to achieve her mission in life, to give back and make an impact. And she also didn't let the tax stop her from doing it. Also notice she didn't just borrow against the Bitcoin, because had she done that, as you know, the rest of the story, yes, it did go to about 68, 69, but then it dropped down to about 15,000 a coin, right? Which would have called, the margin calls and all kinds of different stuff, right? So instead we exited at 54,000 a coin. 5 of her, about 50 million at that time, deferred that tax, okay? Now here's the cool part. I want to really paint this picture. You can play the Monday morning quarterback with Bitcoin and defer tax with our strategy, because we can defer the tax and then go back into it at any time we want. Now, her scenario, she put 4 of the 5 million into her investment, right? The other million was diversified and she just received cash flow from that. But in a perfect world, what's possible now, and I think we've seen this, fluctuate, between 80,000 a coin to 100,000 a coin, and it bounced around for 3 to 6 months, kind of like that. Then we set even newer highs, let's say at about 125, 125,000 a coin, and then we're fluctuating, 103, hitting kind of these different markers here. But we have some predictable things that are happening within the Bitcoin world. And so you can now exit, defer the tax, and you can buy back in at these lower amounts, these lower valuations. And that's the big piece here that we were able to accomplish with her. And by the way, she never sold any other Bitcoin. It did go down to 15,000 a coin. Now I think we're over 115,000 today or so, what around there. And her valuation is, over $100 million worth of Bitcoin. It's incredible what she's been able to achieve. But we're a part of that team, so it's the power of right? Achieve your dreams and your impact, and defer your capital gains tax. And if you don't want to ever sell Bitcoin, well, you still sell it with our strategy, but realize you can still get back into it, right? So there's power in the ability to sell when you think it's optimal timing. Is that making sense, Bo?
I love that story for so many reasons. One of which is it calls back to when I was first navigating how to have a strategy in this space. Tried early on trading and collateralizing and all of these different ways of holding on to as much Bitcoin as possible. And the most optimal strategy on a financial basis is not necessarily the most optimal on an emotional basis. And making the most money, if you do it the wrong way, can absolutely wreck your quality of life. And that seems to be, at least from the outside, one of the biggest benefits of taking a strategy like this is that, yeah, you're leaving something on the table on purpose so that you're not sweating every morning when you wake up to, am I at liquidation price? There's no benefit to holding on to all of your coin if it wrecks your quality of life all the way through. And that's the biggest issue that I see, especially with people who have just unbelievably high net worth denominated in Bitcoin, is that if the price movement shakes you, and that's part of why I love mining, is that I don't really pay any attention to it because we've got plenty of margin in the operating basis. But if that price movement is moving you emotionally, then the wealth that you're building kind of loses its value if it doesn't translate to quality of life.
100%. Don't trade what's priceless for what's profitable, right? That's the number 2 mistake after not having the family mission, vision, values. And so you got to be really clear about what's really priceless for you. Well, number 1, we know that time is priceless, right? So if you haven't built a truly passive income plan where your time and your energy and also your emotional energy is at peace, financial peace is not just, enough income to live off of. It's also emotionally feeling like you're not having to think about it really at all, right? And it includes some diversification. It includes debt freedom. It includes the ability to access and live off what you need to live off of, right? And so this world is I think the abundance mindset is the and piece of this, right? And so don't trade what's priceless for what's profitable. And then the next one I would say is the ability to then move in a way that makes an impact for others, right? Because at the end of the day, like at a certain point, we've earned or grow enough to live off of our truly passive income where we can, it covers our expenses, our lifestyle. And then it's like, okay, once you've established that, it's almost like now I can go and invest and build my Bitcoin empire for like making a huge impact, right? And it's not just my family and what I'm doing here. It's like, how do we go make an impact? And so here at Capital Gains Tax Solutions, we exist to unlock capital gains to multiply freedom and impact. And that means different things for different people. But what are those things that break your heart? What are those things that are going to make a huge difference for society? There's about 100 trillion transferring in the next 5 to 15 years by the baby boomers to the millennials. It's the largest wealth transfer in the history of the planet. And simultaneously, we have the exponential growth of Bitcoin happening. And so you have these two worlds colliding, right? Where this transfer, tax is the big roadblock or the big, enemy here that's going to punch everyone in the face if we don't have these plans in place. So it's building the team, it's getting wise counsel, and it's still not. I just want it really, really clear. You can do both, right? You can sell, you can diversify, you can dollar cost average back in, and you can do this in a way that you can be in a place where you feel true financial peace.
So you've walked through a couple of what I think are excellent kind of keystone mindsets around building wealth, keeping it, having a great impact. What do you think are some of the more damaging beliefs or mindsets that people get into that keep them from both building wealth, keeping it, and having the impact that they want to have in life?
Yeah, I would say some of the top mistakes are, with diluted focus, you get diluted results, right? I think one of the biggest common mistakes people make is they think they need 7 different income streams, right? And so they chase all different 7. I think if you really break it down into like the Bitcoin world, instead of just going all in on Bitcoin, they have all these other coins that they're chasing, and they're hoping that it's the next whatever Ethereum or the next Solana or the next whatever, right? And instead of like focusing like a laser and going all in, they're in some sense there's some diversification on it, but they never really make a lot of momentum because they don't really study or know the backing of it or whatever it is. So I think that's part of it, right? The other part of it is it's all these different things. They have Airbnb, they have real estate, they have Bitcoin mining, they have Bitcoin investing, they have meme coins, they have just all of this, and they don't really get the best in class focus on that, or they don't have the best in class advisors to help them with that, right? So it's kind of those twofold things. You want to make sure that you you break through that truly passive income opportunity, right? First, right? And so part of that's building a business, making sure that you have the basic fundamentals of budgeting. And, when I first got married, it was Dave Ramsey, debt-free, snowball, paying off all the debt, the budgeting, living below our means, like getting all those kind of fundamentals in order. Then it was like graduating to like rich dad, poor dad, and moving, getting, some passive income. Then it's like kind of graduating to truly passive income. So it's each layer involves you making changes and finding the top advisors to help you with those next changes. And so those are just a couple that kind of come to mind. And as far as making the impact piece, I think, one of my coaches says, you got to set a number. Like you got to pick a number. Like what is your number is it 10, 20, 30, 40, $50,000 per month? Set that number, get that accomplished where it's truly passive. Then everything else is like, I'm gonna choose to pre-budget for giving and making an impact above and beyond that. I'm almost going to choose my lifestyle in a sense, right? And it's not always going to be, well, just a little bit more, just a little bit more, just a little more, because you've already intentionally planned out what is enough. Because in our society, it can be difficult, right, to know when enough is enough. So I think those are some of the things that come to mind for that.
What was it for you personally that shifted or kind of brought to the front this mission for impact? Because there's plenty of people who will help you avoid tax and who will help you build your wealth, but there's not often a huge focus on what you can do with it. And I really appreciate that about what you guys do.
Yeah, personally, it's my faith, right? So growing up, basically a single mom, right? When my parents got divorced, and then the Lord providing, coaches in basketball and football and youth pastors, and the Lord always providing and blessing me. And I think, I believe we've been blessed to be a blessing, right? And so it's naturally my mom and my dad was a good dad too. It's just they were divorced. It was just hard, right? So there's these different pieces of the puzzle, and you look back and you say, hey, these things can be used to grow me, and these things can be used to make a difference and an impact for others. And so I think it's just so many people loved me and poured into me, and God opened up doors and opportunities. I think also, growing up, we were very intentional about, going and building houses in Mexico, right? For those who didn't have houses, and going on missions trip to share the gospel. And we just, I took my whole family to Uganda about 6 months ago, and we put in clean water wells for multiple communities. I think it's the practice of actually giving, funding these projects, which we have for years. And so it becomes who you are. And it's that. So I would just say it's not really me. It's just, I think just, God blessing me to be a blessing for others, and my heart breaking for things like ending, human trafficking, right? So we support causes like that. So that's what I would say. So, jump in and actually serve physically in these types of opportunities, give financially, become, aware of these things that are out there. And, I guess this is kind of who I am, if that makes sense, Bill. I don't know if there's like a moment, except for that's just always it's been a part of my faith.
I think that's a perfect answer. And maybe if you've got one, because this is part of the focus that you have when you're working with clients, do you have any, like a favorite story that you've got of a client who unlocked this ability to have an impact through working with you that you especially touched you?
Yeah, I think about Warren and Catherine that come to mind. And one of them, so they had kids. They had two kids a little bit later in life, two twin daughters, and they, they're living in California. And Warren and Catherine have an apartment complex in Sacramento, and they're driving. He's driving 3-4 hours in a weekend back and forth traffic, and he's away from his family. And he's saying, hey, I really feel like I'm trading what's priceless, the time with my two daughters. In fact, 85% of our time with our kids, Bo, if you have kids, will be spent before they're 18. Once they're 18, you've spent 85% of the time that you'll ever spend with your kids. You have 15% left, right? And so Warren is feeling this pull, to be away from his wife and his two kids on the weekends, taking care of this property where he has a couple $1 million of wealth. He has some passive income, but it's pulling him away, right? So in other words, he's trading what's priceless for what's profitable. Now, by the way, keep in mind, he loves the apartments, and he really enjoys taking care of the tenants. It is actually bringing some meaning to his life. It's profitable, right? It's making about $120,000. But we really had to sit down and say, hey, what kind of impact could you make for your family by being able to unlock your time to spend with them more intentional time. And so that's a great point. And so we exited the asset at about 2.5 million. We deferred about $1 million of total tax. We paid off the debt. We diversified the wealth. We increased the cash flow. Here's the key, from 120 to 190. So he had two things going on at once. Number one, his cash flow increased by about 60%. Number two, he diversified his wealth and had asset protection. But number three, the most impactful thing is he traded the toilets, the trash, and the termites, we call them the 3 T's, for the 2 T's, his twin daughters. Okay. And that was just like, oh my gosh. Like, and so we're sitting down and just at a conference about 2 months ago. And he's like, Brett, I didn't realize how much time and energy this was taking. It took about 3 to 6 months. And I looked up from the fog and was like, I never have to deal with that property ever again. Right. And I could just focus my energy and my time on my daughters. Like, this is incredible. Like, so having the belief that the abundance of time can be unlocked with your kids now. And it's not just real estate, right? It's whatever it is. It's whatever that thing is that's pulling you away from your family. That's the obstacle. Figure out where you're at, get clear on what's the obstacle, and then let's figure out a plan to unlock that. That's what Warren and Catherine did. And then curtailing on that. Now we're invested, we're doing so well. He's like, Brett, we have all this extra cash flow. I'm like, yeah. Now what can you give to right now? And so we're going back to Uganda, and hopefully they'll bring their whole family. So they missed the last trip, but they want to bring their daughters, and they're being introduced to our community, and they're being invited to these trips. So hopefully they bring their daughters on the next one, and then they can start to use their time and the extra cash flow to say, see, here's our tangible way that we're making a difference. And it's the stewardship of passing that heart of generosity that is the biggest thing that we can do for the generation. The physical money is important, but the stewardship of the capital and the generosity, passing it to the next generation, is the things that are priceless. And so that's this next layer that we're working with them to unlock.
Man, that's so beautiful. And I just love that this is, in many ways, like in Bitcoin, the phrase is come for the money, stay for the revolution, that there's this deeper layer to building wealth and retaining wealth that in many cases, it's not the first thought that people have when they get into it. But if you're like me, when you get a chance to work in it every day, it's one of the most satisfying things, is getting people out of the day-to-day stress of whatever problem they're looking to solve immediately and into that long-term planning, that wider impact, the things that they don't know that they're coming to you for, but that have such a far-reaching impact that lasts beyond just solving that one problem.
Precisely.
So practically, we've talked a lot about mission. You've got several different tools in your tool belt, so to speak. Mm-hmm. I think most people would be familiar with the 1031 exchange in real estate, which, coming from the real estate world, that was probably the most common hammer, meet, nail kind of strategy. But you tend to at least talk more about something called a Deferred Sales Trust. Mm-hmm. So I had not heard of that before meeting you. And if you could, would you walk me through why that's sort of the most all-around positive and helpful tool that you use for people who are looking to mitigate capital gains tax or defer it or avoid it entirely?
Yeah, absolutely. So what are some of the key advantages of the Deferred Sales Trust, and who might it be work for, and why would you use it, and how does it work? Well, first of all, we'll start about who's this for. It's for anyone who has at least $1 million net proceeds, $1 million gain on the sale of really any asset, Bitcoin, crypto, primary home, investment, real estate, business, and you have at least $1 million net proceeds, $1 million gain. So you're subject to somewhere between $200,000 and let's call it $400,000 of tax on the sale of that, right? So about 20 to 40% is going to be taxed. So that qualifies you to be able to use our service. We found that's kind of the minimum, right? And so we really have built it for those who, have built their investments or built their businesses and don't want to give away 20 to 50% of their proceeds on the exit, right? And so the unique advantage of it is the entrepreneurial focus, right? So I think as, Bitcoiners, as real estate owners, as entrepreneurs, as business owners, we want the ability to control our destiny and our future. Like, we don't want to be put in a box, right? And so the beauty of the Deferred Sales Trust, the number one thing to understand is that time is your friend, okay? It's not your ticking time bomb in a box. The old 1031 strategy, by the way, doesn't work for Bitcoin or business sales. So if you have that, it doesn't even work for it. But if you had investment real estate, you couldn't use it. But the challenge is time is in a box, meaning you have to identify in 45 days an investment real estate property and close on in 180 days. And that whole concept of loan is puts you at a disadvantage, right? We want to leverage time to our favor. And so, by the way, if you're selling a business, real estate, and you want to get into Bitcoin, you can do it tax deferred through our strategy. So this can be a bridge tax deferred to get into Bitcoin. In fact, we had a client, $13 million exit in San Diego, car wash sale, who sold. His basis was about $4 million. Couple partners sold, deferred all the tax, and he bought Bitcoin at about $40,000 a coin, right? Amazing, right? And so you can diversify into Bitcoin tax deferred from other highly appreciated assets by using our strategy. That's the beauty of the deferred sales trust. There's no like-kind replacement requirement. There's no timing restriction. There's no debt replacement requirement. You can kind of like self-direct, if you will, and joint venture partner with the trust. You need to work with the trustee. And I'll kind of go through some of the reasons, some of the things to consider as you're doing that. But you can joint venture partner to start a new business venture. It can be in Bitcoin or crypto business. It can be in Bitcoin mining, right? And so really cool stuff where, like a self-directed IRA, you can go into these things. So you're not also just completely passive with third-party advisors. You can joint venture partner with the trust. So those are just a couple of the real neat things. You also have what's called asset protection. And so if someone sues you, this trust is separate from you. And so it's protected. Your asset protected from creditors, okay? How does this whole thing work? It's pretty simple. It's just an installment sale. In fact, if you ever borrowed against your Bitcoin, part of why it's tax in that scenario, tax deferred or tax free, is because you haven't sold the Bitcoin yet and you're just taking a loan against it. Well, we're using a similar concept with the loan, except you're selling it to a trust and the trust is issuing you a loan. And by that mechanism, IRC 453 of the IRS tax code, you're doing an installment sale with a trust in exchange for an interest rate and the amount that you lent to the trust. And so let's make it real simple. In fact, we were the first to do this, and I'll walk you through the exact deal that we did this with a client who sold Bitcoin, okay? The one I was telling you about. Well, we set up a Kraken account in the name of the trust. She transferred the Bitcoin to the trust, and the trust issued you basically a $5 million promissory note. I think we wrote the note at like 8 or 9% or so, right around there. And then we did some partial interest payments starting in about year one. And she, instead of paying $1.85 million of tax, deferred all of that. So the full $5 million is what's owed to her plus an interest rate. Here's why it works, Bo. If the trust buys for $5 million and sells to $5 million in the open market, guess what? The trust has zero gain, right? So the trust has no gain. And since she hasn't received any of the $5 million principal, she's in a deferral on all $5 million, right? Including the $1.85 million of tax that would have been triggered had she taken the $5 million. And as she gets payments back from the trust, she only pays tax on what she receives in the given year. And that's the whole concept, right? Most will just structure it with interest or partial interest payments over a 10-year period of time and just slowly pay tax as they receive payments, but typically never dip into the principal. Every 10 years, you can renew for 10 years. You can pass it to kids. You can keep it going kind of basically for as long as you like. And your kids can step into your shoes. That's a little bit how it works. Let me tell you a couple of the roles. There's a DST tax attorney that's on our transaction team to help you with the legal part, lifetime audit defense. There's the trustee. That's our role. We're kind of like an IRA company or a 401k company or a 1031 exchange company. So we execute the trust aspect of it. And then we can work with a lot of private equity real estate groups. We can work with financial advisors if we want to bring them in. But collectively, we build a team where we don't have to have any of those folks. And it's just like, you and me, Bo, going back into your own business ventures or your own Bitcoin mining and maybe having a little bit of diversification on some of the funds. That's basically the picture here. And then you report it on as an installment sale on your tax return. So it's fully reportable. Quickly on the legal track record, thousands of transactions, billions of assets sold using this, close to 30-year track record with the tax attorney team that we work with, and about 30 no-change IRS audits. All no change, no findings. So we're batting 1,000. Most of the deals done in California. And that's kind of it. We work on a conditional basis. Fees are about 1.5% to 2% on the annual recurring fee on the AUM that we get paid. And then the one-time legal fee is about 1.5% to 1.25% of the gross sales price. And that's kind of the math there, if that helps to make some sense on that.
Yeah, so much to unpack there. And thanks for doing a really comprehensive overview. One thing that you mentioned that I think is really important is, you've said this before, a strategy is great until the IRS audits it and finds that you didn't do it right or it was totally illegal. So the fact that this has been audited quite a few times throughout its history and passed every time without any sort of revision, huge deal. There's a lot of very interesting, I'll just say interesting, strategies that float around the space, since Bitcoiners are usually on the leading edge and sort of the far fringes of what is commonly understood and allowable. And this would be one that is not really controversial at all. So
let me just add to that. It's never been on a dirty dozen list. It's never been on an IRS watch list. We have been audited for over $120 million deal in California, all no change, no findings. So we're batting 1,000. It's literally perfect legal track record with thousands of transactions. So we're not guessing at this. We're also fully reporting it, like with your CPA. And there's kind of a insider like understanding of this. It's typically a 3 to 4 year audit window from your exit. And after that, it moves into basically like you're not going to be audited again, right? Unless you did something that was fraudulent. Which we're not doing, right? So it's all fully reportable. Nothing's offshore. Everything is like, this is what we did. We did an installment sale. And like, for example, if Bo had a $1 million apartment complex, right, in Colorado, and he goes, I want to let the buyer, get financing through me. That's called a seller carryback. It's so common. We're literally doing the same thing. We're reporting it the same way. We're just doing it with a third-party trust, right? And so it's actually really, really, really simple. We'll walk your CPA through all of this. Like, it's that clean and that simple. But you're right. I think too often one of the bigger mistakes is people will go and work with these, either things that are not been through audits, don't have decades of track record, don't have thousands of transactions. And typically why those all fail, because they're not within the rules of the IRS, right? And so you want to be very careful, that every single tax strategy works. Every single one of them does, until you get audited, right? And so you don't want to be the person who gets audited and just blows it up. Just use one that's been proven like ours.
So just to go through, anything like this, there's usually some barriers. One of them you solve pretty handily, which is the complexity, the setup, making sure that it's treated properly. It's also not just a total. It's not a complete write down of any tax liability. It's a deferral, right? So, correct. What do you see in terms of impacts typically for people? And I know that every case is totally different, but like, just as an example, it's not you did have capital gains tax of 20%. Now it's 0. What are you typically seeing in terms of reduction through a strategy like this? Yeah.
So it all depends, is our favorite answer, right? So couple things to think about, right? We'll cover like how to make the DST an investment, not an expense. And I think this will answer some of your questions, right? So I'm gonna give you the actual deal. So we did an $8 million exit for a primary home seller in Palo Alto, okay? Now they moved to Nevada, and this is a key point here, right? Because the trust is a loan back to you, depending on what state you reside, is what tax you'll pay on the interest that you receive from the trust. Okay, so guess what? California is more expensive tax-wise than Nevada. So they sold in California, deferred their tax, moved to Nevada, paid ordinary income tax on the interest. I say ordinary income tax, this is important. That is on the interest. The nexus of the principal is California. So should they dip into the principal, it will be California. So you're not changing the nature of the nexus. If it's New York, New Jersey, the nexus is staying there. Bitcoin, I think, is a little bit different, right? Because technically, does it have nexus in a California or New York, New Jersey? I don't know. I think we talked with your CPA about that. There's some things there. That's part of why people move to Puerto Rico and establish residency and then get a couple of years there and then maybe start exiting. So there's some things there that we could look at, in your unique circumstance, but I'm just kind of giving you the typical nexus. But moving to these different, Florida, Nevada, Tennessee, Puerto Rico, once you establish residency, the interest that's paid from the trust is in that home state. So that's definitely a tax savings there. I'd say the other thing about making the DST an investment, not an expense, is figuring out ways to get depreciation on the purchase of new businesses, equipment, real estate. So for example, you could exit 10 million of Bitcoin, defer, let's call it 3 million of tax that you would have paid. And then you could turn around and do an LLC, and that LLC can invest and build a business with Bo, right, with Bitcoin mining. And guess what? 100% bonus depreciation has been established. And the trust can put up the capital, and then you can run the business. What's cool about that is because it's a new purchase of new equipment with a new LLC, although it's tax deferred money, you have the ability to get what's called tax flow depreciation in your favor. Before, you had 10 million of Bitcoin that had no depreciation opportunity, right? Now, in this scenario, you have the ability to partner with the trust to get the ability to get depreciation. So this is really, really cool. And then if those values go up, you can also capture additional upside. One of the things that people think about, they go, well, if I'm just doing a loan, am I capped at like the 8, 9, 10% on the interest? Well, no, not if you joint venture partner with the trust and you become a 80 to 98% upside owner in this LLC. We'll get a little more complicated here, but this is why it's for the entrepreneur. It's for the Bitcoiner who wants the more upside because of the way we can structure it. And that's where we come in to make sure that this is all clean and precisely, laid out for you. So I think that answers some of your questions there. We can also eliminate the estate tax. So if you're a Bitcoin billionaire and you're listening to this, like what you have to realize is that, or 100 millionaire, like the exemptions are about 30 million married if you're an American citizen, 15 million single. Anything above and beyond that is subject to a 40% debt tax. Not that you're planning on dying anytime soon, but just keep that in mind. Like if you're worth 130 million in Bitcoin and your plan is, I'm just going to die and get a stepped up basis and keep borrowing against it. Well, the surprise here will be you're going to pay 40 million in estate tax upon your death, right? Because that's not outside your taxable estate. So we can sell that $130 million of Bitcoin, watch this, move it outside the taxable estate, forever eliminate that 40% debt tax, and then go back into Bitcoin and let that thing grow from 130 million to, let's call it $1 billion of wealth over your lifetime. All of that is outside of your estate tax, right? It's forever eliminated without any life insurance, gifting, or charity required, right? It's not forced on you. So you got to think of a bigger play here for your legacy. And once you combine all of those things, people go, oh, wow, I see here. This is not just a tax deferral mechanism. This is a wealth building machine, kind of like your Bitcoin building machine. We're like a tax flow building machine, right? And so it's shifting your mindset from just cash flow to tax flow and longer term, strategy within all of that.
Okay. I have a follow-up question, but I know that if I had this thought, somebody else listening had this thought. You just unpacked a very basic or set of circumstances, but if someone thought, okay, I need to go reach out to Brett right now, how can they get in touch with you or a member of your team to start unpacking their situation?
Yeah, it's capitalgainstaxsolutions.com. We also have a book you can pick up on Amazon with Kevin Harrington from Shark Tank, and it's called Building a Capital Gains Tax Exit Plan. It's my story of what we've been talking about today. And like literally this is the playbook, right? And we could follow this to the T with your unique circumstance, and we can build it. It's called Building a Capital Gains Tax Exit Plan. You can get that on Amazon or just go to capitalgainstaxsolutions.com.
Awesome. Have you ever felt like you've done everything right, built the business, made smart investments, and yet there's still one piece missing? If you're someone who believes in Bitcoin but hasn't yet explored mining, let me introduce you to something that most people never even realize exists, and that is fully managed Bitcoin mining with Abundant Mines. We help high net worth individuals like you own industrial grade mining infrastructure without ever touching the machines. It's hands-free, professionally hosted, and designed to generate passive income by turning electricity into Bitcoin every single day. It's tax advantaged, it's asset backed, and for many of our clients, it's become one of the smartest moves that they've ever made in their investing career. So if you're ready to take the next step into real Bitcoin ownership, not just holding, but producing it at a discount, visit abundantmines.com. That's abundantmines.com and see why this strategy is changing the game for serious investors. I know there's so much that we can learn just from having conversations like this and give people ideas, but ultimately everybody's individual facts are going to be hugely different. And there's always complexity involved in, like you said, the nexus of where they live, what their business is like, their current inheritance structure, their estate planning. So want people to have an avenue to reach out to you directly. The question I had was specifically for the deferred sales trust. We talked about timing being an issue with 1031 exchanges, where you've got this immediate shot clock that's just breathing down your neck as soon as you decide that you want to sell and avoid that tax. With the deferred sales trust, what kind of timing, like how early do I need to be planning about this if I'm exiting a business or exiting a position? Like what's the complexity? What's the timeline?
I'm going to tell a story of this because this is going to bring it to life. So I have another great client. He worked for Ripple, okay? And he had massive amount of Bitcoin and Ethereum. And I'm driving. It's a Saturday morning. I'm driving from Sacramento to Walnut Creek, and I'm driving for this insurance licensing one day training course. Okay, and keep in mind I'm a real estate broker by trade, and we're building this out for him, and he's been waiting. He had a target in mind, and we built it for about 3 months. As far as going through the legal stuff, getting him comfortable, all of these things. But he's like the nicest guy, and he calls me. He's like, "Hey, Brett, I know it's early in the morning, but." Ethereum just hit, I think it was like $3,500 or $3,000 a coin. Like, this is my moment I've been waiting for. Okay. And let me back up the story, right? Just 3-6 months before that, he had just told his wife for the first time that they had this position in Ethereum. In fact, it's like their anniversary. He's like, babe, I got to talk to you. And she's like, what? What's going on? He's like, well, and she thought it was like something serious. She's like, well, I've been investing in this thing and it looks like it's doing pretty well. And she's like, okay, well, what is the thing? And he's like, well, it's about $100,000 I put into Ethereum, and now it's worth about $8 million. And she's like, sell it all. What are you waiting for? He's like, I have this tax situation here. And she's like, but we can retire. Like, what is this thing, Ethereum? I don't even know. And he's like, well, let's just talk. And she's like, sell it. Like, she's right. We can retire. We're done. Like, this is what we're waiting for. And he's like, well, I don't know, because the tax thing. And she goes, okay, fine. They settled on, they're going to go find a tax solution for this. Okay. Well, part of the story is, things can go up and down, right? And so by the time they find us, the value drops to, I think, about 1.5 to 2 million. So now they're like devastated. Like she's upset, and he's like, "Don't worry, it's gonna come back." I work for Ripple. I know this whole thing, and da 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 da. And like I'm studying this thing, right? And she's like, "Gosh, you missed it." So we go through this process for about 3 to 6 months, and I literally should go and map this out. It goes ebbs and flows. And so finally, they say yes to our strategy at 8 million, and we're ready to go. It drops to like 5. Then they want to meet in person. I'm like, no problem. I'll come meet you in person. So I drive to Oakland, and they live on like this cool, like nice part of Oakland. It's like kind of a valley and overlooks like all this cool stuff. And we're sitting out on their deck, and I'll never forget. I'm like, so how are you guys doing? What's your sense for selling? And they kind of have this friction going on. So I'm trying to be like the kind mediator. And he's like, well, Brett, I think we're pretty much ready. I'm like, well, what's the value of it? He goes, hold on. And he clicks his phone, right? He unlocks it, and he goes, okay, it's at 11 million today. And I'm like, okay, so it went from like 8 to 11 in like a 2-week period of time. And his wife's sitting there, she's like, why don't we exit? And like all of this anxiety. And so to answer your question was, we can exit and build a trust within like 7 to 14 days. Like it's really the speed of trust, right? We can have a trust set up. We can open up a thing at Kraken. It takes, it could take maybe 7 to 14 or 21 days with Kraken once we open the trust. Like really, it's just getting everything in line and the KYCs. And by the way, we went back and forth to Kraken, and probably the first one we did like 100 emails with the tax attorney and their legal team. And what is this stuff? Who are these people? We basically worked through to unlock all of this. Okay, so back to that call. He calls me and he's like, okay, Brett, it's time, right? And it was like, he's like, are you by a secure Wi-Fi? I'm like, no, I'm not. I'm on the way to Walnut Creek, but maybe I can get to your house. He's like, okay, well, what are we going to do? I'm like, well, let me just get to a secure Wi-Fi, and then I'll basically give him the launch codes, because I have the launch codes on Kraken for all the trade stuff. And by the way, we had done test amounts. Another kind of funny story. The first test amount was for like $10, and Kraken basically for the Ethereum, unless it's 25, they're not recognizing it. And so we're like, where is it going? And like, so now there was like this concern here. So finally we figured that out. So the pipes were all the way connected. Well, over the next hour, we started with like 100,000, then 250, and then 1 million, and then 2 million. And we did that over the next like 3 hours. And while I'm providing him live launch codes and he's executing, and we did it. And we exited about 5 million within 3 hours, was in Kraken. And then we immediately turned around the next day and we wired it out to Schwab. We sold it to cash and wired it out to Schwab. I know that's a long story, but we established trust over about 90 days. We tested out the accounts and opened up accounts another 30 days. We worked with the family to get comfortable with everything. And yeah, he's been a client for years. And so this is a huge success story, but it's not without its process of sitting down and going through it together.
So the TLDR on that is as quickly, maybe as a couple weeks, ideally a few months to plan for this, but you can have the vehicles set up to take action at a moment's notice.
Correct. And there's no upfront cost, right? So if he decided last minute he didn't want to do it, or if Ethereum had dropped and it didn't hit his price, we don't get paid unless he actually closes. And if he decides not to close, we never get paid. So we literally take all of that pressure off. And we'll promise you never to talk you into anything that we don't feel it's a good fit. At any point you don't think it's a good fit, let us know. No hard feelings. Just let us know. Like it's really not a sales thing. It's really just a structure and a strategy and a team thing. And once you understand that, like it's a, we think it's a no-brainer, right? If it fits your needs and your goals. But yeah, you're exactly right. It can set it up quickly, but earlier the better. And there's no harm in setting it up, even if you don't use it.
So no huge sunk costs, no crazy commitments. I mean, I'm probably just like you. Churn is the enemy of any good long-term business. So you don't want to have people on board just because they feel pressured to, and then look for a way out as quickly as possible. So I think that's super admirable. And as a Bitcoiner, of that story, my favorite thing is that you help someone sell their Ethereum and get out of it.
We also did some Bitcoin too. He did, I think, about 500,000 of Bitcoin. That's hilarious, though. I love that. Yeah, but he got out at a pretty good price. I feel like Ethereum's having its little bit of run back here after being like dormant for a while. So
it's almost, I think it's just past its 2021 levels very recently, which is kind of a funny joke in the space. And I say this as someone who only deals in and owns Bitcoin at this point, but I had years of Ethereum and anything and everything else that, was a trial by fire to realize what was the, as you said earlier, the one focus that isn't going to absolutely destroy my long-term returns that I can really optimize for and not get distracted by shiny object syndrome and land it on Bitcoin.
There it is. And I don't think it's ever going to let you down, right? If you focus on Bitcoin, that's the one that is the future, right? So he made a good decision. And I think it was his thought, like he's going to ride Ethereum and then exit at a good price, and then Bitcoin, like, so that he's of the same mindset. He just happened to buy 100,000 worth of it and just explode it, right?
Right. And I see that mindset a lot in the space in general, is like, I'm going to do all these other things just to get Bitcoin, which is not inherently a flawed way of looking at the world, but I just love simplicity. Just go ahead and start saving in the best asset and skip the middleman. But to each their own. Everybody's got their strategy. One thing I want to ask you, because I was a full-time real estate investor. I know that's your background, but you've become super open and likely advise people on a very diverse array of assets and strategies outside of just tax mitigation. Real estate's been most of the world's and the largest capital pool's store of wealth and wealth creation vehicle for probably the longest time. How do you see things like Bitcoin shifting that mindset, that narrative, or complementing it?
Yeah, I mean, I think for all the things that Bitcoiners and would believe and we're seeing come to fruition, like they're starting up the printing press again to drive down rates, right, and the inflation train is going to keep going again. I mean, this whole concept of the government having next to zero fiscal responsibility with the US dollar the printing press of just, devaluing the dollar constantly. Is the $37 trillion of debt. I mean, you can't trust them to be stewards with the wealth of America. That's the biggest thing. And so you've got to get back to the hands of the people to say, fine, we're not going to trust you. In fact, it's just the opposite. It's going to be, decentralized, and it's going to be a fixed amount, 21 million coins. And we're not going to reply to it. We're taking the responsibility on ourselves to do that, right? And it's worldwide. So all of these things basically take the power away from the governments, right, who are not responsible, who have proven not to be responsible, and put it in the hands of the people. So that's the biggest thing. And now that, the Trump administration has got in, and they're much more favorable than the previous administration for this concept, I think it's just a matter of time, and how that fluctuates, or how that works with the dollar, and how that fluctuates and works with, Bitcoin buying real estate and that whole world. I know how long it takes and what it looks like in 5 or 10 years. I don't know, but that's the biggest thing. It's kind of just simple math at this point. And the government is proven themselves to not have the clear mission, vision, values for the people. But Bitcoin gives us that ability to get that back for us. So that's my best answer on that, I think, Bo.
When you are advising your clients and they're asking you for your opinion, are you telling them, hey, Bitcoin is a growth asset, or Bitcoin is a wealth preservation vehicle? Or do you take a totally agnostic approach and try not to impart your views on them?
It's a good question. I mean, the reality is, whenever I invest into anything, or if I'm presenting something, I'm going first myself. I mean, I'm very transparent, right? So whether it be real estate, whether it be Bitcoin, like, I just share it, and they go, what percentage of your asset allocation is where, and so we're it's a team approach rather than like an advisory approach. So I'm not necessarily being like, hey, do this thing. It's more like, hey, here's an introduction of this opportunity, and what do you think about this? In fact, I have a lot of my clients that have taught me and were earlier on, even heavier on Bitcoin. So my clients are entrepreneurial, Bitcoin, business, like, they're really, really, really smart, right? And very, very, very wealthy. So, and very, very open-minded, right? If that makes sense. And I think the younger you are, the more open-minded it tends to be. But I have clients in every different age group and every different background all over the country that believe and invest into Bitcoin and other coins. So I don't think it's a one-size-fits-all, I guess is what I'm saying. And we collectively come to the conclusion of where to invest, but oftentimes they already know where they want to invest, and I'm just kind of a guide to facilitate that. Although as a trustee, I do have to approve of investments, but yeah, we work together to really try to mirror and build a foundation that fits their mission, vision, values, their truly passive income number, the diversification piece. And oftentimes, that means bringing in investments into Bitcoin. So it's customized. So it's not a one size fits all, Bo, is what I would say.
When you're advising people, is there ever a point, and maybe I can ask this a different way, wealth planning, tax planning, it's this very long-term game where I think you've compared it to a chess game before, where early moves have a huge influence on how the later stages of the game go. What are some early moves that people make, whether in Bitcoin or business or tax planning, that you see have the most detrimental impacts on your ability to help them when they come to you?
So that's a good question. So just real quick, we can work with C Corps, S Corps, LLCs, partnerships, public stock, private stock, Bitcoin, other crypto coins, real estate. Some of these, depending on how you've structured your ownership, might make it a little more restrictive for like how flexible it is to do this. Let me give you the ideal fact pattern for clients that we work with. They have single member LLCs that only own that particular, investment, or they have joint venture partner LLCs, but they're not filing as an S Corp. That makes it super flexible for who and where can use the structure and strategy. Although we can work with S Corps and C Corps, right? But I would say that's ideal. There's no poor planning per se. It's just being wise about what you're trying to accomplish. Now, if from the Bitcoin world, I guess you could look at this from either an operational business perspective, like with your clients that are building, have LLCs and are mining it, right? And maybe there's a valuation of that LLC over a certain period of time that you could value. And so that's kind of something interesting where you're selling the entire operation, or versus those who've invested in Bitcoin and the value's gone way up in their personal name. So I don't really think there's like mistakes per se is what I would say to this question, except if you have a choice, do it in an LLC. If you have a partner, do a joint venture LLC, and just have it issue a partnership K1 each year and a partnership tax return, and don't take it to an S corp. That makes it uber flexible for our strategy.
Love it. Well, I feel like we've hit really well on tactical. I want to start winding down with kind of a little bit more impact and philosophy with you. And first question I've got for you is, what's something about your work that hardly anybody ever sees, but that you're extraordinarily proud of?
I would say my family. Like I think just personally, like 5 children, we homeschool our kids. A very entrepreneur family. We travel. Like I said, we do impact trips. We are very hands-on with jiu-jitsu with them and soccer, and we do a kind of an unschooling method. It's very leadership, faith, biblical focus on their education. And so I think the biggest impact you can make that anyone can make, in their lifetime, if they're a parent, right, is with their kids. And so I think it starts at home, and it starts with that leadership with my wife and I to lead our family for the mission, vision, values, and the calling on our life to make it to help the most vulnerable people in this world, right? To share the gospel and to bless people who are less fortunate. So I think that's the thing that maybe they don't see as much. And then on the other side, I think it's helping others do the same, right? And it starts with the truly passive income. It starts with the getting more margin in their time. It's that literally, like, we invite people to events and we have live events. Like I'll be speaking at one with Tim Tebow and John Maxwell and Lloyd Reeb. And these are some of the best leaders in the world about faith, family, impact, wealth, and growth. And so getting in environments and communities that can help you in your journey with this, because this world with technology and this pace of life can speed up. And so we're big on like community and bringing everyone together for these events that are the entire family events, right? A lot of events you go to, it's like, even if it's Bitcoin or real estate or whatever, it's conferences all about more like the tactical and that thing. It's like, we like to start with the foundational values and talk about the tactical. And so I would say that's the second piece of that's a big piece of the meaning of what we're doing behind the scenes.
I love that. That's a beautiful answer. For the book of your life, what chapter are you in right now, and how would you title it?
Yeah. So, so I'm actually going through a coaching program with a guy named Lloyd Reeb and Don Winter, and it's called 100X, right? And it's basically at 40 years old, generally speaking, it's like the halftime of your life. And the first 40 years, there's the different stages of just, childhood and then education, and then getting the career and getting the momentum and getting the financial, and the family. And it's like, what do you do for the next 40 years? And now it's really focused on impact, right? Making a 100X impact and serving and using the gifts you've been given to be a blessing to the most amount of people. So if I would say I'm in this not only just a growth, but I don't want to say it's just transition. It's because it's an and. Like I think a lot of it's like, oh, I can build my wealth or my business or go make an impact, right? I can spend time with my family, or I can go build my business, right? I can go to college and get a degree and get straight A's, or I can have a fun time and spend time with my friends. And so one of my mentors, Don Winter, he says it's the power of and we've got to change our mindset to it's both, right? I can be a great father and a great husband and and build a huge business and make a big impact at the same time, right? So I would say it's a refining of intentional planning with mentors and really looking at time as our greatest commodity, right? We're coming off a week of one of the biggest, one of the bigger tragedies with Charlie Kirk and school shootings, and in 9/11 as a reminder that time is short. And so I think it would be the chapter of the urgency of time. In fact, my verse of the year and my focus of the year is basically like, what is your life? It's just a vapor, right? We don't know how much time we have left. And so I would say each of us are in a season, but we don't know if that's when our end is coming, right? And so what is the good work that you are being called to do? And today is the day to do that work, right? And so urgency of time, I think it would be called. And I think it would be during the chapter talk about, and literally I listened to on YouTube, it's if you search Billy Graham time, there's like a 4 or 5 minute clip of him speaking about the how short time is, right? And how quickly it's passing, and how today is the day to do what God's calling you to do. And so that would be the chapter. It'd be time, it'd be urgency, it'd be implementing things that are going to move me towards this divine calling of making an impact today with my clients, with my family. And then the next chapter or co-chapter would be the power of and, not settling for one or the other, but an abundance mindset of doing both today.
Man, what a beautiful answer. Following up on that, if you could distill the impact that you want to have in your lifetime, how would you characterize it?
Yeah, I think that the biggest impact that the Lord is going to help me to make will be with my children and my family, and the legacy that we build with the passing on of sharing the gospel, of helping the most vulnerable people in this world, and not settling for anything less than what He's called us to do. And so that's what I would want to be remembered by, that I finished the work that I was called to do, that I broke generational, dysfunction and sin in the family of alcoholism, of abuse, of things of the world, right? That it stopped with me and my wife, and we passed on a legacy of really our mission for our family is forever faithful to Christ, always united, transforming the world. Our core values are Bible, family, stewardship, grit, and impact, right? And so it's living and passing on these core values, and looking back, multiple generations, we'd say, hey, great grandma and grandpa, they built into us, through this line of generational, biblical impact. So that's what I would want to be remembered of. And that's like the 100x type of impact, right? That we can all make if we think about how important today is, and how much it's going to change with each generation that comes after you.
Brett, I'm so grateful for you sharing your time with me and sharing your time with the audience. And like your client base, our audience is entrepreneurs, builders, investors, likely in real estate, Bitcoin. What would be your parting piece of advice for them, whether in life, business, investing, or impact that you're called to share before we sign off?
Yeah, I mean, I would say, don't wait, right? Like if you're feeling moved to do the next thing, take that step of action, whether it be building a capital gains tax exit plan, whether it be building your family mission, vision, values, whether it be going to church, whether it be opening up the Bible, whether it be going on that missions trip, going on that impact trip to make a difference. Like, I have 5 kids, we homeschool, the businesses, 2 podcasts, and we, part of homeschooling is designing our life so we can travel with our kids. We travel all the month of June, we'll travel all the month of October. Like we do these things, and it's, we do jujitsu, we do all this stuff. But again, just thinking about the ability to do the thing, don't put it off, right? I think the top 5 regrets, if you study a book of people that if they die, they're like, hey, I wish I would have done these things, right? And there's books on this. And one of the ones that number one regret is not having the courage to live authentically instead of meeting others' expectations. Right? I think too often we're letting the outside, whether it be family members or friends or the world or whatever the culture, make us or we succumb to fear of what others' expectations are for us. So you want to live authentically and have courage of what you feel God's called you to do, right? And if you're not a believer in God, I encourage you to be a believer in God, believe, right? And then number 2 on this list is working too much and neglecting relationships. Number 3 is not expressing feelings and leaving things unsaid. Number 4 is losing touch with close friends. And this is universal. They studied this across all cultures in all nations. Number 5 is taking life too seriously, not allowing themselves to be happier. So like kind of just study those things and go, make sure I don't do those things so I don't have these top 5 regrets at the end of my life.
Brett, honestly, one of my favorite podcasts that we've ever recorded. So much value shared. Love the mission you're on. Really appreciate the way that you show up in the world. For people that want to get in touch with you or keep up with the podcast, anything else that you're working on, what are all the ways that they can find you? Website, podcast, any contact info that you'd like to share?
Yeah, so the big catch-all is brettswarts.com. It's BRETTSWARTS, not a Z at the end, S at the end.com. That kind of has all of the things. And then if you want to build a capital gains tax exit plan, that website's on there, but you could also just go to capitalgainstaxsolutions.com. On YouTube, we have the Build It to Billions podcast YouTube channel. And then we have the Capital Gains Tax Solutions podcast and YouTube channel. So you can search Build It to Billions, Capital Gains Tax Solutions. And then again, if you want to just build a capital gains tax exit plan, download our free ebook, go to capitalgainstaxsolutions.com.
Awesome. And all those links will be in the show notes or the description. And Brett, really appreciate you sharing your time with me today. This was awesome.
Thanks, Bo.